Let's talk about the heavyweight Reliance because that's going to be in focus today. It reported its numbers Friday late evening. Somit is here to break down the numbers for us. Somit, seems like a strong set of numbers came in from the company. How was the segment performance? What did well? What was amiss?
Well, in the fourth quarter, if you see, Reliance Industries has reported a strong set of numbers, and these numbers were largely led by the O2C segment of the company. Now, if you see the O2C segment EBITDA, that jumped nearly 17% on a sequential basis, and the number came in at close to 16,300 crore rupees. Analysts were going with a number of close to 15,000 crore rupees. So, big beat has come in the O2C segment. In fact, if you see the O2C segment's EBITDA margin in the fourth quarter, they were the highest in at least the last 14 quarters. Now, the beat in the O2C segment was led by steady refining and higher petrochemical margins. In fact, the margins in the fourth quarter was also aided by lower energy cost. Naphtha, which is one of the key raw materials for Reliance Industries, was down nearly 20% on a sequential basis, and that is a major reason why there has been a big beat in the Reliance Industries numbers in the fourth quarter of FY23. Apart from the O2C segment, the retail, the gas exploration and telecom business of Reliance Industries reported pretty much in line set of numbers. In fact, for the telecom business, if you see, the growth was the slowest since the company has started reporting its financials, and this was owing to no tariff hike and muted subscriber addition. Coming on to the important part, the company's finance costs were higher owing to the higher interest rate, while the company's net debt, now this remained largely stable on a sequential basis despite higher capital expenditure, which is a positive thing coming in for the company. Also, Reliance Industries in its analyst meet said clearly that they aim to maintain their leverage ratio, that is net debt to EBITDA, below 1 times. And this is a positive line coming in from the company given the investor concerns about the rising debt. Earlier it was a net debt free company and the debt had suddenly increased to over 1 lakh crore rupees. However, the company aims to keep it below 1 times, and this is a positive statement coming in from the company, which lowers the investor concerns regarding the rising debt of the company. Now, brokerages have largely maintained their stance on the company post the results. No, there has been no major upgrade or downgrade coming in for Reliance Industries post the fourth quarter of FY23.